Are you a selfish investor? I mean, do you structure profits for others in your real estate deals? If not, you're not a bad person, but your opportunities may be limited. Let me explain. Now, let's say you're an airline pilot, right? You fly the plane, the airline provides the airplane, the maintenance, the flight attendants, the infrastructure, everything. But in the end, you as the pilot get paid, and the airline and their investors get paid also. It's a win-win deal for the airline and you. Now, what if the pilot had to do it on his own? He had to buy his own plane, maintenance, infrastructure, coordinate marketing. How many planes can that pilot afford? And do you think that pilot can drum up enough business, 70, 100 hours a month, and get paid the same salary that you do as an airline pilot? Of course not. We make more money when we partner with the airline, so we have a win-win situation, or else you wouldn't be wearing that snazzy pilot uniform, would you? Now, what do I mean by all this? In the last few videos, I've been pushing the importance of taking advantage of the CARES Act, because we have less than 2 months to use it. But why is Mike preaching all this? How can it benefit me? Well, if that's your question, you need to watch this now. Okay, let me use an example so you can see how important it is to take advantage of the CARES Act. Now, this is a local real estate example. It's a fourplex in my local area of Colorado. Now, at a purchase price of $300,000, this could be a really good deal to work with. How do I know this? Because I use my deal formula that I provide to you for free at layovermoney.com/formula. Okay, now, so this fourplex for $300,000. Mike, how is this realistic? Because as I'm about to show you, you and I are about to be cash buyers. And as cash buyers, we can close on the property in days instead of weeks. Now, this is a big incentive for the seller, especially because in the next few months, the real estate market is very uncertain. If we can close by Friday, we got this for $300,000. Okay, I found this property, this fourplex. Time to go back to work. So I'm flying with this Captain Bob. Captain Bob has $200,000 in his IRA. And because Captain Bob listened to me and took advantage of the CARES Act, he now is able to take another $100,000 from his company match 401k, put it in a self-directed IRA, and now we can partner on this deal. All right, now a question for you. How could we make this fourplex deal profitable for both myself and Captain Bob? So let's just start out with the easy one. All right, to demonstrate to you and to Captain Bob how we can structure this deal to profit both of us, I'm using a software program called Property Evaluator. So looking here, our purchase price is $300,000. The buying cost, that's the closing cost, over 30 years. So Captain Bob and I have determined that he's going to use $300,000 out of his self-directed IRA account and lend it to me to purchase this deal. And I'm going to pay Captain Bob $1,995, about $2,000 a month. Now that is money I normally would have given to a bank, but now Captain Bob's retirement profits. Now let me show you the rest of the numbers. All these expenses here are actual from this actual fourplex in town. Here's my cash flow. Captain Bob is making $2,000 a month. I'm making a cash flow of just north of $1,000 a month cash flow. All right, now to properly analyze this deal, we want to look at it at the entire life of the loan that Captain Bob is interested in. So I love this part of the Property Evaluator software. It gives me year 1 to year 30, all the numbers. Now, it accounts for appreciation of the house, of the rents, and also the appreciation of expenses over that 30-year timeline. So right now, after a year, I'm cash flowing in my pocket $12,000. Now, the last few weeks that I'm still paying Captain Bob, I'm getting over $61,000 in my pocket from the cash flow. Not bad for having zero money into this deal, which means my ROI is infinite. And the best part is, since I have zero money in the deal, how many deals can I make? An infinite amount. And this is how the rich become wealthy faster and faster and faster. By structuring other people in their deals, it's a win-win for everybody. Now let me show you something interesting. The appreciation of the house. After a year, it went up $21,000. After 30 years, this $300,000 property that Captain Bob and I have partnered on is now worth almost $2.3 million. Now I know what you're thinking. Mike, from a $300,000 to 2.3 are those numbers right? So let's go over some real numbers from the past 20 years of assessed property tax values, and I can show you these numbers are very close to accurate. Appreciation is incredible, right? And if you want to see a real short video of how I used past historic numbers in order to get those correct figures, just click on that suggested video link above. Now, this line here, this row, potential cash out refinance, is extremely valuable. Because I told Captain Bob, this deal could probably double the amount of money in your IRA. He started with $300,000. He invested with me in this deal. So does he have to wait 30 years to get his money back? No. Potential cash out refinance. Captain Bob needs $600,000 to double his retirement. As you can see, at year 20, I can do a cash out refinance of this property for $640,000. Captain Bob doesn't have to wait 30 years for a 30-year loan. At 20 years, I can pay him back full plus more. Okay, now Captain Bob wants to know, well, what if things fall through? You know, if he invested in the stock market, he would lose his money, and it'd be hard to get that money back. Well, this is why it's smart to invest in real estate. Let me show you. And if you're curious to see how I structured this deal, so no matter if the deal pays or can pay Captain Bob always comes out ahead. If you're curious how I did this, just click on that link above for a suggested video, and I'll give you a 2-minute explanation of how Captain Bob is in a great situation. Pretty amazing, huh? So I've got to work on a real estate deal with zero of my own money, but I'm doing all the sweat equity. Captain Bob, all he does is write a check from his self-directed IRA company, sits back and collects that check, and fly easy across the country because his retirement plan is growing every month. And he gets to sleep just fine in his layover hotel because if something happens, he gets to foreclose, get the property from me, and make even more money. If something like this appeals to you, where you'd like to double your retirement, or you may have a deal like this that you're considering, and would like a second set of eyes to take a look at it. So book a call with me at layovermoney.com/chatwithmike, or I can get you on one of my deals out here in Colorado, or I can give you a hand on structuring one of your win-win deals where you get to help other airline pilots with their retirement.